Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, December the 19th. Markets are lower across the board here this morning, pretty much making new lows as I speak. Corn's down 1 to 2 cents. Wheat is down 2 to 3 across all three classes. Beans are down 10 to 12, lower in the products. Meal is down $3 to $4. Oil is down about 25 to 30 points. Slightly lower in the crude oil, making new lows here in the U.S. dollar, while the U.S. equity markets are up a little bit this morning. Yesterday's rebound in the soybean complex stalled out pretty much right at its 50-day moving average. Also, pretty much put a cap on any rally attempts here overnight. Funds yesterday were sellers in corn and wheat, buyers across the board in the soybean complex. World weather report this morning points out current El Nino weather pattern has likely peaked here in recent weeks. And they also talk about the fact that the impact on global weather has not been as severe as expected. They point out that while El Nino has peaked, it is not over. They do expect that an improved weather pattern for much of Brazil will set up at least by the middle to latter part of January, extending into the months of February and March ahead of the dry season, which begins in April. That said, however, it might be a little bit too little too late to salvage some of the production down in that region of the world. Dr. Michael Cordonier, he lowered his Brazilian soybean forecast by 2 million metric tons here early this week to 155, which now falls further behind the USDA estimate of 161 million metric tons. They also lowered their corn forecast by 1 to 117 million metric tons, well below the USDA forecast of 129 and even slightly below the CONAB estimate at 118.5. Oddly enough, farmers in Mato Grosso and far northwestern parts, a growing region of Brazil, were granted an extra 20 days to plant soybeans this year. They had asked the government for an extension of 40 days, however, were granted 20 by the Brazilian agricultural minister. Farmers in that state can now plant soybeans up to January the 13th. Dr. Michael Cordonier kept his Argentine soybean forecast unchanged at 50 million metric tons, which is above the USDA's 48, while raising the corn estimate to 53 million metric tons. The Argentine government late yesterday proposed a plan to raise taxes on soybean products, soybean meal, soybean oil by 2% to 33%. That would put them on par with the tax rate for soybeans. A lot of wheat tenders going on right now, including Egypt. Lowest tender for the Egyptian tender is at $260 a metric ton on a FOB basis. That from Russia. Other offers range from up to as high as $270, include Russia, France, and Romania. Jordan and Bangladesh also in tendering for some wheat. The recent price rebound in soft red winter wheat futures here in the U.S. Following the Chinese business has pretty much left the U.S. Uncompetitive in the global marketplace. We'll see if this now pullback in price changes that. U.S. corn seems to be seeing some increased competition in the global marketplace from Argentina into the first quarter of next year. However, little from Brazil, and that's likely going to remain the case into late spring, early summer with their second crop, which is going to be a little bit delayed for the most part. U.S. soybeans export likely to struggle against Brazil as we turn into the new year as they're becoming more aggressive. So lower to start the day. We'll see how things play out during the session. Ethanol production tomorrow with export sales on Thursday. Thank you for listening, everyone. I hope you have a wonderful day.